A non-scary current position audit of take-home, other income, and what you own. We've reset your definition of money. Now we give that definition a map. Today isn't about judging yourself or proving anything. It's a simple inventory so the next moves sit on facts, not feelings. Think of this as opening the cupboard before you decide what to cook. No macros, no recipes, just seeing what's already there. We'll capture your monthly take-home, any other regular inflows, and a rough list of assets. That's it. No ratios, no analysis, no should. We are building a calm base for everything that follows. Start with monthly take-home. Not your CTC and not the dream number HR wrote on the offer. I want the rupees that actually land in your account in a normal month after tax, PF, and deductions. If your income is a steady salary, take last month's credit as the baseline. If you have variable components, average the last 3 to 6 months and write the conservative number you can rely on without hoping for miracles. If you're paid twice a month, combine them. If you and your partner manage money together, you can either write your individual number or the household net, choose the view you'll actually use in day 2. Open your banking app, check the salary credit SMS if that's faster, and write the figure in the workbook under monthly take-home income. Pause me for 60 seconds and put ink on paper. Next, add other regular income. If you receive rent, a stipend, side income retainers, small consulting fees, tuition, or recurring dividends that are truly predictable, note them as separate lines. Don't include one-off bonuses or gifts. We want the repeatable flow your month can count on without stress. If a number fluctuates, write a modest average that wouldn't force you into a corner if one payment is delayed. This isn't about impressing yourself, it's about designing a system that doesn't break on a normal Tuesday. Take another minute and fill other regular income. Now we move to what you own. Keep it rough and honest. In the Assets section, list your bank balances across accounts as of today, including joint accounts if you actually use them for household money. Add fixed deposits. Note EPF and PPF as approximate totals. You don't need to dig out exact statements. The current app balance or your best recent figure is fine. For mutual funds, write the total current value across equity and debt if your app shows it. If not, write the invested amount you remember and mark it as invested so far, so we can refine later. If you hold direct stocks, add a single line as a rough current value rather than listing scrip by scrip. For property, capture a very rough number for your primary home and any additional property. Don't get lost in valuation debates. A conservative figure you'd be comfortable saying out loud is enough for today. For gold, note either grams and a round price per gram or a single rough value if that's how you think about it. If you have company RSUs or ESOPs, put a placeholder line with a conservative estimate or vesting X units, value TBD. We're taking inventory, not filing a return. As you write, resist the urge to comment on each line. Your brain will want to say, this is too little, that's stuck, or I should have, not today. Numbers don't need adjectives, they need context, and context arrives in the next modules. Right now, the win is completeness, not perfection. If you can't remember an exact figure, write your best current estimate and add a tiny dot next to it to remind yourself to refine later. It is better to have a 90% map now than a 0% map waiting for perfect data. A quick word on boundaries so this stays non-scary. Do not include your car, furniture, or gadgets as assets for this snapshot. They're useful, but they're not part of the investable or protective base we'll work with. Do not include expected bonuses or future ESOP valuations you're not willing to rely on. Do not overvalue property to feel better. Use a number you could reasonably defend to yourself if the market cooled. Our goal is to make decisions that hold up when life gets noisy, not to inflate a balance sheet for comfort. If you share finances with a partner, you can maintain 2 columns, yours and household, or keep one combined view if that's how you operate month to month. Choose simplicity over symmetry. In day 2, when we build the 30-day plan, the view that matches your actual bill payments will save you time and reduce friction. The Premium Freedom Blueprint is unapologetically life first. We design for how you live, not how textbooks assume you live. Take 2 minutes now to complete the page. Bank, FDs, EPF, PPF, mutual funds, stocks if any, property rough, gold rough, and any other clear line you already know about, like a mature LIC surrender value if you've checked it recently. If a line doesn't apply, leave it blank without guilt. If you remember something midweek, you'll add it. This is a living sheet, not a museum piece. Pause me, finish the entries, and come back. Welcome back. Look at that page. This is your starting picture, not your verdict. You might feel quietly proud, mildly uncomfortable, or completely neutral. All three are normal. In the next module, we'll complete the picture with liabilities and a rough net worth so your mind has a single number to hold. But even right now, notice the shift. You're no longer feeling your money life, you are seeing it. That alone lowers anxiety because the unknown is where most of the fear lives. Before we close, write a short line at the bottom of the page that begins, "What surprised me as I wrote this was, maybe you realized how much is sitting idle in a savings account. Maybe you saw EPF is actually a meaningful chunk of your future safety. Maybe your mutual funds were smaller or larger than your impression." Capture that one line. It will help your brain connect day 1 to day 2 when we start steering cash flow with intent. Good. You've just built the left half of your map. In the next module, we'll list liabilities and compute a rough net worth, nothing fancy, just assets minus liabilities, followed by a single sentence about how that number makes you feel today. We're not chasing perfection. We're building clarity you can act on. Keep your workbook open, keep the tone honest, and keep moving.